Good afternoon, dear plus 2 commerce students. All plus 2 commerce students are welcome to this class. After many days holidays, I decided to start the class. Today's our topic is company accounts. Dear students, do you know what is the meaning of company account? A company is an artificial person created by law. This is the definition of company. Meaning, a group of persons joins together to attain a common goal by way of contributing required amount of capital. See, in company accounts, we will study about how to issue, how to sell shares, and how to issue debentures. For example, if a company want to introduce new capital or to increase the present share capital, and also for introducing a new product in the market in addition of existing product producing year after year. So for these two purposes, company can issue and collect money from the public in the form of shares and debentures. What do you mean by share? Share is a part of share capital of the company. It means company's total share capital is divided into several parts. Such one part is called share. Taking share of a company, it means investing money in the share. Related to customer, we have to take a meaning like that. Taking share means making investment in a share of the company. In case of company, as a part of company will say they are collecting money from public. Then to meet their decision, what they have taken to decide about the amount of shares collected by them from the public. See, there are 5 procedures related to the issue of shares. First one, receiving share application money. Second one, share allotment. Third one, share first call, the share second call, share final call. These are the 5 procedures to be followed by a company while issuing shares to the public and collecting money thereby. Here, there are 5 types of share capital of the company. First one, authorized share capital. Second one, issued share capital. Third one, subscribed share capital. Fourth one, called up share capital. Fifth one, paid up share capital. These are the 5 capital structure of the company to be followed by the company while issuing shares. Dear students, you have to subscribe my channel and please do like my class. If you are interested, then share it among your friends. See, next I am going to talk about the explanation of 5 capital structure of a company. First one, authorized share capital. Authorized share capital is the share capital formed by the company during registration. It has also different names: nominal capital, registered capital, and authorized capital. Authorized capital is the total share capital of the company or registered amount of share capital of the company during registration. Second, issued share capital. Issued share capital is the share capital which is offered by number of shares offered by company to public. Number of shares offered by company to public, or number of shares issued or sold or distributed by company to public. That is the meaning of issued share capital. Next, subscribed share capital. Subscribed share capital means the number of shares already taken by public from the company. How many shares have been taken by public? That is called a subscribed share capital. Then called up share capital. If the face value or original value of a share is rupees 100, sometimes the company will call till 100 rupees or up to 100 rupees. Sometimes company can call up to 80 rupees or up to 70 rupees. So whatever may be the amount, till what limit company is calling on the face value of share, either in full or part, that is called up share capital. Next, paid up share capital. Paid up share capital means the share amount already paid by public to the company. For example, company has issued 10,000 shares of rupees 100 each. So company will get a total amount on 10,000 shares at rupees 100. That is the case of paid up share capital. Once again, I will give a short idea. Authorized means total. For example, if there are 10,000 shares, sometimes the company will issue 10,000 itself. That time issued capital will be same. Then if all of these 10,000 shares have taken by public, it means subscribed capital also same. Then if company has called till 100 rupees face value, then it means that paid up capital also, called up and paid up capital also same. So authorized means total share capital during registration. Issued means number of shares offering by company to public. Subscribed means number of shares taking by public. Then called up means number of share amount which is face value of share. Then paid up means the amount of money to be paid by shareholders on their shares taken. These are the theory parts. Then there are 5 procedures. As I told you about 5 procedures. See, these 5 procedures having 10 journal entries. One is receiving entry and the other one is due entry. For example, when the company receive, for everything we have to give application first. For the shares also we have to give application first. So when the company receive share application money, journal entry, bank account debtor to share application. Bank account debtor to share application. It means company's bank balance have increased by way of receiving application money. Second entry, share application account debtor to share capital. All those application money sent by the customers or public or shareholders must be entered in share capital account. Similarly, in case of allotment, first bank to share allotment, second share allotment to share capital. In case of share first call, bank to share first call, then share first call to share capital. In case of share second call, bank to share second call, then due entry, share second call to share capital, then final call money receiving time, journal entry, bank account up to share final call, then due entry, share final call account up to share capital. These are the 10 journal entries to be noted in company accounts. Next is the case of technical terms to be used by the company. Now I have told you about the issue or sale of shares by company to public. How the company will issue shares and collect money from public. Company will give advertisement to the public in any mode of advertising media. Then public will see this advertisement. Then they will take according to their own wish, their own power. See, this is the way. See, technical terms which I told you about the issue of shares. A company can issue shares in 3 ways: at par, second at premium, then third at discount. First one, at par. If a company issues its shares at face value, for example, the face value of a share is ₹1,000. So company can issue 1,000 rupees share at ₹1,000. If a company issue 100 rupees share at ₹100, it is called issue of share at par. At par means at face value or at original price. Second, at premium. At premium means, if the premium means excess amount to be collected on the face value of share. If a company issues shares more than the face value, that is called premium. For example, 100 rupees share is issued at ₹120. So 20 rupees extra, that is called a premium. Premium means excess amount collected on the face value of share. It is a capital profit. Company can utilize this amount for writing of preliminary expense, then goodwill, etc. See, next issue of share at a discount. This is the third point, third technical term. So, while issuing shares less than the face value, for example, 100 rupees share is issued at ₹80, 20 rupees loss, decrease. This is called issue of shares at at a discount. Issue of share at a discount. These are the 3 technical terms to be noted in case of issue of shares. Company account is very easy account, so you have to study its basic procedure, purpose, then journal entries, some adjustments are there. See, these are the three technical terms while issuing shares at par, at premium, at a discount. Next, call in idea. Call in idea means sometimes some shareholder will not send call money on their shares taken. So such amount is called call in idea. If a shareholder is not paid call money on time, that is called a call in idea. See, in other words, unpaid amount on shares by the shareholders. Those who are taking share, they will be called shareholder. Unpaid amount on share is called a call in idea. Sometimes some shareholders will not send call money on time. Company will give intimation to such shareholder to pay money on share immediately. Then also, if shareholders are silent in sending money, so company will put forward their steps legally. Next, oversubscription of shares. Oversubscription of shares means company has issued 10,000 shares, public has applied for 12,000 shares. So here, dear students, for how many shares company received more application from shareholders? 2,000. 12,000 minus 10,000. Because company is not in a position to give away extra share. What is there? How many shares are there with the company? That only company will utilize to issue. So those who send more money for application for shares, such amount maximum company will adjust and give. But then also, if company is not in a position to issue certain number of shares to certain shareholders, so those money, such application money, those shareholders application money can be returned by company. Company will say that no shares are allotted, your money is refunded or returned. That is the case of oversubscription. So what do you mean by oversubscription? Oversubscription is the, it refers to number of shares, getting more application for shares than it fixed for allotment. Then undersubscription. Undersubscription is nothing but it is a case of receiving less number of application for shares, just opposite of oversubscription, because oversubscription means getting more application for shares. Undersubscription means getting less number of application for shares. For example, company has offered or issued 10,000 shares to public through advertisement, but after the application time, when company scrutinize the application received from shareholders, company could see that public has applied for less number of applications. For example, only for 8,000 shares have been applied for. So such a situation is called undersubscription of shares. Next, oversubscription, undersubscription. Then pro rata. Pro rata allotment means partly allotment of shares. Sometimes some shareholders have applied for 1,000 shares. Company will not be in a position to give away 1,000 shares in full to one applicant. So what company will do now? Company will give away 500 shares. Like that system is called pro rata, partly allotment of shares at the time of oversubscription. That is the meaning of pro rata allotment. All these points are very important as well as theory, multiple choice question, then doing 6 marks long answer type. You have to be very much active about the meaning of company accounts in different technical terms. Then only you will be able to do almost all the problems correctly, getting full mark in board examination. Okay students, so these are the points to be noted while preparing company accounts. Remember the meaning of the different technical terms, understand it. Then problem also, I will come with the solved problems. See, that time again journal entries are there, different remaining technical terms are there. So study well, try to get a full mark in board examination. See students, once again I request you to like my channel. Please do subscribe and please do share among your friends. Okay students, next time I will come with a new topic. Have a nice day.